Hello, beautiful people, and welcome back to Coin Crusader. Shalom, moneymakers, and happy Freaky Friday to all of you. Today is Juneteenth, which means the stock market is closed, and that leaves us with one big question on the table. Will crypto get more love today with no traditional market trading? Or will it get less love because there is less overall liquidity moving around? On top of that, precious metals are continuing to drop hard, and we need to talk about what that actually means and how it connects back to the crypto market. We also have to dig into what former President Trump is saying, what Vance is dealing with right now, what a well-known German analyst is pointing out about XRP, and whether the struggles among Bitcoin miners are becoming a real problem for this market. There is a lot to get through today, so before we dive in, all I ask is one simple thing. Give me a big smile to send out some good vibes. Smash that like button, and let's get into it. Please remember to read the disclaimer before we start. Right now, XRP is sitting right around $1.12, and we are still in the middle of a 4-day pullback across the crypto market. This comes right after the broader market celebrated the news earlier this week that the United States and Iran appeared to be moving toward a deal. Crypto rallied on that announcement, and ever since then, we have been steadily pulling back. It actually reminds me a lot of what happened when the Clarity Act passed out of committee. We saw that same pattern, a nice run-up followed by a bit of a deflate, almost like the air slowly leaking out of a balloon. That same feeling is creeping back in right now. The market just feels like it is missing some real juice, some real conviction, some real institutional weight behind it. And that is something worth paying close attention to as we move through the rest of the week. Another piece of this puzzle might be tied to what happened with SpaceX. On Friday, everyone was buzzing about the SpaceX IPO talk, and that excitement brought a little extra energy into the crypto market. But since Tuesday, SpaceX shares have actually been pulling back hard. I am not saying there is a direct connection, but it is worth noticing. Tuesday was the peak, hitting a high of around $225, and from Wednesday into Thursday, it dropped roughly 24% off that high. So here is the real question. Are people selling off crypto to buy this SpaceX dip? Or is this simply a broader wave of panic selling hitting everything across the board at the same time? Both are real possibilities, and honestly, the truth is probably some mix of the two working together to create the pressure we are currently seeing. We also touched on this last night, but it deserves another mention here. There are real fears building around MicroStrategy, now simply called Strategy, and what could happen if Michael Saylor's company is forced to sell off more Bitcoin to cover losses tied to their preferred stock, ticker symbol STRC. We went deep into this topic last night, although that particular video did not get as much attention as usual, and I think I know why. Between the World Cup buzz, the Knicks championship parade, and the US Open golf tournament, a lot of you were out there enjoying the moment instead of watching crypto videos. And honestly, that is completely fine. I know this channel's audience skews heavily towards sports fans, so if you missed last night's breakdown on the strategy situation, go back and check it out when you get a chance, because it directly ties into what we are seeing in the market today. Before we go any further, I want to remind everyone that everything discussed here on Coin Crusader is strictly for educational and entertainment purposes. This is not financial advice, so please always do your own research before making any investment decisions. On a related note, the trading competition is still live for everyone out there actively trading the market right now, whether you are going long or short. The prize pool includes a very generous 3,500 XRP up for grabs for the top trader. If you want in, the link is in the description below, and it works even if you already signed up through my link previously. Anyone already trading on BTCC through my link is automatically eligible. Just please be careful out there, because leverage can absolutely be a powerful tool, but it can also be extremely risky if you are not careful. And yes, this is an affiliate link, so I do earn a commission if you use it, and I appreciate every single one of you who does. Now let's get into the big news everyone has been waiting on, the Clarity Act. Today, bipartisan lawmakers launched what looks like an 11th hour push to get this bill across the finish line. For a while, people were holding out hope for a July 4th signing, but Eleanor recently clarified that, technically speaking, that timeline simply is not realistic. There are not enough legislative days or sessions left to make it happen by then. That said, lawmakers are reportedly preparing a packed sprint of meetings next week to nail down the remaining details of the Clarity Act before everyone breaks for the August recess. The Senate is clearly feeling the pressure to get this deal finalized soon, and that urgency is a good sign, even if the original July 4th target is officially off the table. Adding to this conversation, a well-respected German XRP analyst is now saying that insiders believe a July 4th signing is essentially impossible at this point, but a deal landing within just a few days of that date is still very much on the table. Here is how I see it. It genuinely does not matter whether the Clarity Act gets signed on July 4th, July 10th, July 15th, or July 19th. The exact date is not what matters here. What truly matters, the only thing that actually matters, is that it gets passed at all. Some of the selling pressure we are seeing in the market right now might simply be a reaction to that slight delay in timeline. A little bit of disappointment from people who were hoping for a faster outcome than what is realistically possible. Let's shift over to precious metals for a moment, because something significant is happening there too. Over the past 24 hours alone, more than $1.7 trillion has been wiped off the precious metals market. Gold is currently down about 4.75%, and silver has dropped a staggering 9%. As of right now, gold is sitting around $4,100, and silver is hovering near $63. Remember just a few months ago when everyone was talking about how hot gold and silver had become? That is usually exactly how markets work. By the time everyone is calling something hot, it is often already too late to get in, and that is precisely what we appear to be witnessing now with this sharp pullback across the metal space. Part of this pullback in precious metals appears to be connected to growing concerns around the Japanese yen. We discussed this in detail last night as well. Historically, when the Japanese central bank has had to step in and buy up yen to prevent it from weakening too much against the dollar, it has triggered what is known as a Japan carry trade sell-off, and markets have not reacted well to that in the past. This could very well be part of why we are seeing pressure on precious metals right now, and it may also be contributing to why crypto is under pressure as well, since traders often try to get ahead of these kinds of macro shifts before they fully play out across global markets. Meanwhile, on the political front, President Trump has been saying that the markets are doing well overall, including the stock market and the broader progress around international deals. However, there is a complicating factor. Vice President J.D. Vance has reportedly postponed his planned trip to Switzerland, where talks between the United States and Iran were expected to begin on Friday. According to U.S. officials, this postponement is connected to claims coming out of Iran regarding the ongoing situation in Lebanon. The big question now is whether this delay could end up derailing the entire deal altogether. Tensions in that region remain high, and we need to stay prepared for the real possibility that this agreement could get pushed back, paused, or even fall apart entirely, even though optimism had been building just days ago. I have said this before, and I will keep saying it because it is genuinely important. Always keep that little monkey sitting on your shoulder. Right now, your monkey might be small, but over time, if you ignore the warning signs, that monkey can grow into a massive gorilla weighing you down. That monkey represents the constant reminder that markets can shift in an instant. One offhand comment from a politician, one surprising headline, one unexpected data release, and the entire market can flip directions without warning. This is exactly why staying dynamic and adaptable matters so much, especially depending on what kind of investor or trader you actually are, because the mindset required for short-term trading looks completely different from the mindset needed for long-term investing. If you are someone who trades short-term, whether that means day trading or swing trading over a week or two, your strategy probably involves closely following the news, watching market commentary, maybe even leaning on AI tools to gather information quickly, and then making fast decisions based on all of that. Sometimes those trades work out beautifully, and sometimes they do not, and that is simply part of the game. Swing trading gives you a slightly wider runway to work with, factoring in bigger picture events like upcoming Fed meetings or major economic releases. Long-term investing, on the other hand, requires a completely different mindset altogether. People who react emotionally and impulsively while trying to invest long-term rarely end up successful in the end. Only a small handful manage to pull it off that way, so it really is worth remembering which game you are actually playing. Now let's talk about something extremely important happening behind the scenes. Right now, roughly 20% of Bitcoin miners are operating at a loss. This connects directly to conversations we were having before the most recent Bitcoin halving. Historically, after each halving event, miners would see their output cut in half, prices would eventually climb, and profitability would return to normal. This time around, things played out differently. Bitcoin actually hit a new all-time high before the halving even happened, which had never occurred before, and interest rates were sitting at unusually high levels at the same time, which was also unprecedented. As a result, prices did not behave the way many analysts expected, and Bitcoin ended up selling off instead, leaving a noticeable chunk of miners struggling to stay profitable in this current environment. According to JP Morgan, Bitcoin has now been trading below its estimated production cost for 5 consecutive months, which is putting enormous financial pressure on mining operations across the board. Publicly traded mining companies sold off more than 32,000 Bitcoin during the first quarter just to keep their operations funded and running. This creates additional selling pressure on the overall market, and the longer Bitcoin stays at these lower price levels, the more likely it becomes that struggling miners will need to sell even more of their holdings just to survive. Public companies like Mara and Riot have the option of raising capital by issuing more stock, but smaller private mining operations do not have that luxury, leaving them with far fewer paths forward during a stretch like this. When you put all of these pieces together, smaller private miners are essentially left with 2 real choices if they want to stay afloat. They can try to secure a loan from a bank, or they can sell off portions of their Bitcoin holdings to cover their operating costs. Neither option is ideal, but it gives you a clearer picture of why there continues to be steady selling pressure weighing on the market right now. Combine that with the macro uncertainty around the Clarity Act timeline, the political tensions surrounding the Iran talks, and the broader pullback happening in precious metals, and you start to understand why crypto has felt a little sluggish over these past several days, even with so many potentially bullish catalysts still sitting on the horizon. Looking purely at price action, XRP is creeping back down toward that $1.04 level, edging closer to the psychologically important $1 mark. Some of you might look at that zone and think it looks like a juicy buying opportunity, while others might believe the market still has further room to fall before it finds a real bottom. Honestly, that call is entirely up to you and your own personal strategy. You can choose to trade this short term, hold for the long term, or simply sit back and watch how things unfold from the sidelines. Just please stay careful out there, because conditions can shift extremely fast, especially if you are trading with higher leverage. Leverage truly can be an incredible tool when used wisely, but it can also wipe you out quickly if you are not respecting the risk involved. Before we wrap things up, I want to remind everyone one more time about the ongoing trading competition. If you consider yourself an experienced trader who is comfortable using leverage, and you want a shot at that impressive 3,500x RP prize pool, simply sign up using the link in the description down below. If you are currently trading on a different exchange, feel free to hop over and join through that same link. And if you already have a BTCC account sitting around that you maybe forgot about, now is the perfect time to jump back in, because the competition is still running through the middle of July, and whoever proves to be the top trader walks away with that full prize. Thank you so much for watching today. I genuinely appreciate every one of you tuning in, and as always, let's make a lot of money together.